Are these birds going to ease up or what? Today we're talking about something very exciting. The economy is not the stock market, and the stock market is not the economy. Where are you all going? So this has been precipitated by a lot of discussion I've seen online. People talking about, oh, the XYZ company is up X amount of percent. That must mean the economy is doing well and things are starting to look better in the wake of coronavirus. And the answer to that is no, not really. It's something, but as with basically everything, it's a little bit more complicated than that. Let's take a second to talk about what the stock market actually is. It is a representation of the largest of the companies in a particular country that are publicly traded. It means you can go and buy a small piece of them. So stocks that people are obviously generally aware of are Tesla and Apple and things like that. The companies that tend to make up those publicly traded companies, as they're called, are generally the ones that are largest. To undergo an IPO, an initial public offering, to become public is a really lengthy, expensive process. You normally don't do it if you're just a small company of 50 people, right? And so therefore what we have is a representation of the economy that is not representative of what the rest of the economy actually looks like. When we're looking at how the economy is actually going, what we care about are bankruptcies, mortgage defaults, unemployment rate, things like that, because they affect everyone, no matter what sector of the economy that you're in, and they're generally indicative of other things that are going well or not so well. Just purely on the fact of the numbers, like there are entire sectors of the economy that are not represented by what happens in publicly traded companies. So for example, in April in the US, I'm just going to use US numbers because they're the most readily available, 20 million people were out of work in April as a result of the coronavirus. And yet, for some stocks, the asset prices are higher than ever before. Now, why? Could be due to tax cuts, could be due to stimulus spending, a bunch of reasons. But you can see that it's almost completely untethered to the reality of what's actually going on in the situation. So how many people in the US work for publicly traded companies? Well, publicly traded companies make up about 1% of the total number of all of the companies, and they employ about a third of the workforce. So what you're looking at there is an entire 2/3 of the economy that are not being represented in the NASDAQ or the Dow Jones or things like that, right? So yeah, Apple shares are trading up above $300 a share, and that's great for people who own Apple shares. I mean, don't get me wrong, I've got an Apple Watch. I'll buy everything that they make, but if they had an Apple dildo, I'd check it out, I'd suss it out, you know, what's going on there. But the fate of Apple does not reflect the fate of the country. The fact that their shares are trading above $300 a share again, US, doesn't mean everything is going hunky-dory with the economy. If anything, it means that people expect that these larger players, these mega cap stocks like Apple, are going to edge out smaller competitors in this environment because the rest of the economy is contracting. They might be able to gobble up competitors or take up more of the market share because they'll be the last man left standing, right? But if you're looking at it, you go, oh, the stocks are up, everything's going hunky-dory, and that's definitely been one of Trump's major arguments, right? Like, how good am I? The stock market's been going great, therefore the economy's been going great, right? So there are a number of major differences between companies that are privately held companies and publicly traded companies. For one, publicly traded companies are highly profitable, hold significant sums of cash, and have regular access to public bond markets, so they can get loans and stuff that other private businesses can't generally get access to. They're far more global than the typical American family firm. Roughly 40% of their revenues come from abroad. So even if the economic situation domestically isn't going so well, which it's not, there's still potential for you to be generating revenue outside of the country, which those profits are brought home, right? Another point about all of this is that the way most people interact with the economy is through their job, right? A lot of people don't own stock. They can't afford to own stock because they don't have enough excess capital lying around to do something like that. So the problem is the benefits that accrue as a result of stock asset prices going up is that they accrete, the benefits of that accrete to a smaller and smaller number of people. So, for example, the top 1% controlled 40% of household stock holdings. You've got a bunch of people that own stocks, but the people who own most of the stock are already the wealthiest people who don't need to necessarily rely on that income as a way of living. The people who are actually struggling as a result of all this, the people who are losing their jobs or are unemployed, they make up the vast, vast majority of the real economy. And something which I've noticed as well is that a lot of these tech companies that make up the largest part of the value of the stock market are also not employing anywhere near as many people as their predecessors. So, for example, in 1962, AT&T and General Motors employed 1.2 million people. Facebook in 2019 employs 44,000 people. So, the problem with the modern tech company is that it doesn't take anywhere near as many people to run. An indication of Facebook's economic health is less meaningful to the entire economy than what General Motors would have been in 1962. Because they employ so many people, there is a very real effect. Okay, well, if General Motors is doing well, it's much more likely that the general economy is doing well because of the amount of people that they employ. Tech companies just don't have that now. You know, you can have $1 billion company and it be 12 people running out of your mum's basement. Maybe you're that hacker that Donald Trump thought was sitting on his bed that's a 12-year-old boy. You could also have $1 billion company as well. All of which is to say that the reality of the economy is increasingly decoupled from what's actually happening out in the world. The fact that you could have 20 million people unemployed in the space of a month and some asset prices keep going up means that the stock market is less an indicator of the economy and more just a graph of rich people's feelings at this point. So when you hear that the Dow Jones is up 5%, don't necessarily take it for granted that that means the economy is doing well. It seems like a lot of people are going to be shirt forked for the next couple of years as a result of this crisis, and sky-high valuations on the Apple stock that they don't have is not going to help them at all. So, yeah, everything's much worse than we think. Delightful.